The Dow finally hit support. I've been talking about this for many weeks, and not only did it hit it, but it nailed it exactly right on the money to create a fourth touch on this very long-term uptrending support line. It dropped about 4.6% to finally get there. Because this support is uptrending, each day that goes by, it takes less percentage for the Dow to drop to hit it. It only had to drop 4.6% because it intersected several days later. So that all of a sudden makes it not that big of a drop. It didn't bounce on strong volume. It bounced on basically average volume, which is not bad. There's still some bullishness there. I would be really bullish about it if the S&P 500 was also in the same situation as the Dow, but it's not, and we'll get to that a little bit later. But I'm still cautious about the Dow. I'm not convinced that it's still got a lot of steam to keep going. I'm going to be watching it closely, but more importantly, I'm going to be watching the S&P 500 because that's really the benchmark of the entire market. What the S&P 500 does dictates a lot to me what I do for my trading. Now, the Nasdaq had a similar situation to the Dow in that it reached a pretty solid all-time high and then basically eventually intersected right on the money with this long-term uptrending support. Same thing, a fourth touch, and that's usually a very, very bullish signal to me. Although Friday it closed on a down note and on at least average volume. So that's not a great sign. Now, we are a little ways away from the all-time high, so there's room to run. But again, I'm a little cautious because this bull market to me seems a little bit tired, and I'm not seeing huge volume spikes on these up days, and I'm seeing good solid down volume on down days. So to me, that's not a great sign. I'm cautious about it. The Nasdaq was more than 9% away from this support before it finally intersected. Now, it didn't have to drop 9% to intersect because several days went by and the support line was increasing. So it was more like an 8% drop, but still, that's a much more substantial drop than the Dow experienced. And lastly, the Nasdaq closed 5% away from the all-time high. So there's a lot of power required to get it back up there. And I don't know if the market has that power right now. These volume indicators are showing me that the market might be just a bit tired. Now, looking at the S&P 500, we still have this very troublesome, worrisome megaphone pattern. Recently, in the last 2 weeks, the price action is even more erratic and conflicting. So there are up days and then kind of wild down days and then back to up days, and the volume's kind of all over the place. It's not looking like a solid uptrending market to me. The pattern known as a megaphone is really a very bearish pattern. I would not be a bit surprised if this pattern breaches this first support line, moves down to hitting this bottom support line. The S&P 500 is very overextended. This market is tired. The S&P 500 is going to find its way back down to this lower support and probably hit and maybe bounce off of it. The worst case scenario would be that it eventually hits this lower support and then breaches through it. And if that happens, then we're into more than just a market correction. That's definitely a very strong correction. So to breach that is going to be close to being called a crash. And especially if it breaches through and then continues going, then it's definitely a crash. We're not there yet, but this very erratic price action here is definitely worrisome. I do not feel great nor confident about putting money into the S&P 500 or any of the indices at the moment until this gets resolved. Otherwise, I'm going to keep my eye on it and we'll see what happens. If you have any questions about the indices or stocks or any of the technical analysis that I've been discussing, please put your questions down in the comments section below. Please subscribe to get all of our latest videos, and don't forget to hit the like button below if you enjoyed this video. Thanks for watching, and I'll see you next week.